What's up, YouTube? It's Joe Catchpollia sitting on the couch making some money investing in fractional real estate online, as usual. Today, we're going to talk a little bit about Arrived secondary market. We're in the middle of another one of their open markets, so between now and the March 13th, you're going to be able to trade on the secondary market. And they have quite a few properties listed this time. If you've watched any of my videos, you know I'm not really a huge fan of Arrived. I only ever bought one property on there as an initial IPO. I only did it because you have to have at least bought one in order to participate with their secondary market. On their secondary market, the reason I think it's more interesting is you start to get some discounts. And that's what I'm going to talk a little bit about today. They actually changed their user interface. And I wasn't sure if I was just like imagining things. So before I was, I was sorting by this field here, which gives us a discount. What's the discount to Arrived's valuation? And their valuation isn't necessarily the real world value of the asset, but it is, which is something else I'm going to dig into a little bit. Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online, Arrived being one of them, but all, Mogul, Lofty, Ground Floor, Arc 7, just all the other ones that I talk about. Just because I'm providing those links and I share what I'm doing on those platforms doesn't mean that it's the right thing for you. You want to do your own due diligence on the platforms themselves and also on any properties that I talk about. Just because something looks like a good deal to me doesn't mean that it is, and it doesn't mean that it is a good deal for you, because we're just in different situations. We might have different risk tolerance, different time horizon, and different opportunities to invest elsewhere. Also in the description of this video, I have a link to the Discord channel that I set up for fractional real estate investors. There's a couple hundred of us in there now. You're welcome to join, please. If you do join, look out for imposter versions of me that have been reaching out to people right after they join. I've booted them from the server itself, but they somehow find out when new people join and then send you DMs. I'm not trying to sell you anything on that platform, so anybody that looks like me that's trying to sell you something is not me, so please report them to Discord as an imposter. And okay, back to what we're doing here. I don't like that I have to say that in every video, but there's, a lot of people have been approached by scammers, and some people have actually fallen for it as well. And so I just don't want that to happen to anybody that joins. But I think there's a lot of benefit in us having a community where we talk about all these different platforms and how we're going about investing in them. So what did they change, right? So I've been sorting on this, but now this is the average open. Let's see, weighted average price of all open sell orders that have not yet been matched. This is much different than what it used to be. I had to go back and I watched one of my old videos and found it used to be best available price, right? So you could sort and find what the best available price is. Now that's not the case. I think they probably changed this because it looked so bad to have just gigantic discounts, right? So like if you're participating on the secondary market and you see that there's these 30 and 40% discounted shares, it might make you not want to buy on the primary market, right? And so I think this is probably from their marketing side, them saying like, oh, let's change this so it doesn't look so bad, because this is much less useful. Because I don't care what the average price of an open sell order is. I want to know what's the cheapest ones that are available. And so now when you sort by this, it's not really helping you very much. And I'll give you a couple of examples why. So like, you have the Bella here, right? And it's saying, okay, your average discount is 11.8%, but you have a whole bunch that are listed for above the above the current price. So like if we look at all the orders, and we try to find ones that aren't matched. So let's see, we have 184 that are $8 or over. And so how many? And we have well, these are going to match there. So add these two in. So 204 that are over 780. And so that's 100, 111, and then add here. So already at $8, there are some shares available for $8 that there aren't buy orders already matching up. And so $8, if we look at what's the actual discount that $8 is at their arrived valuation, it's more than a 20% discount. So even though it's showing you an 11.8% discount, there are shares available at a 20% discount to the arrived valuation. This is just really frustrating. Like, there's not going to be an easy way to go about finding the deals this time, because you can see, you might have some where there are a decent amount of deeply discounted shares that aren't matched up, but the average, like this average 10%, these, let's take a look at how much those really are. So we're discounted from 944. What do we have here? We've got, so at $8, there's 110 listed for sale. There's only 10 that are, that somebody's willing to spend that $8 on. So $8 compared to 944, what is that? $1.44 divided by 9.44. It's that's a 15% discount on a decent number of shares that are available. But when you look here, it only looks like it's a 10.4%. I don't know if I've mentioned that we need an arrived assist. I know I'm always asking for Limas to make new websites, and so I think there's a lot of opportunity. I know that a few other people have talked about doing aggregator sites and whatnot, and I think things like this are where there's an opportunity, right? Like, what I'm doing is I've got my little spreadsheet, and I take, I go through one property at a time, and I figure out which ones, how much there are, the price for shares that are available. Like, if I put an order in now, I could get ones that match up with one of these prices, and like more than just one or two, right? I want there to be at least 10 or something like that. And then what I'm doing, I'm taking the arrived valuation, which they give you, and then I'm going on to Zillow. So, when you go to one of these properties, if you go into the details, you can find the address, right? It's really easy to find the address, find the property on Zillow. And I'm just taking whatever the Zestimate is. And now, obviously, we talk a lot about Zestimates and how they're not always accurate. You could, if I were going to buy this particular one, I would spend more time than just pulling the Zillow number. But what I'm doing is I'm doing something that I can do really quickly to compare across a whole bunch of properties. And then it'll help me figure out which ones I want to narrow down and do some due diligence on. I'm sure somebody could come up with an easier way to do this, something automated, but I'm an old person. I don't really automate stuff. Maybe like my version of automation has always been I hire a VA through Upwork, and I give them a spreadsheet, and I'm like, hey, look up all this stuff, plug it in. And so you can see the Zillow valuation. I'm using this, number here. What I'm doing is I'm taking this estimate, I'm plugging it in, and I'm dividing it by the number of shares for that particular property. And so you can figure that out just by clicking on the financials tab in that property. And then you just scroll down. So like this has 36,354 shares. And so in this valuation, I'm taking this estimate amount, the 349,000, I'm dividing it by the available shares. And that's getting me what I'm basically saying, that's how much value in property there is per share, assuming Zillow's value is correct. And so then I'm taking the price that there's some available, and I'm calculating a discount. Okay, so what's the discount that's available at, from the Zillow valuation, right? Not from I don't care about what the discount is from the arrived valuation. I care about the discount, because I'm not trying to look at the security, right? I'm not trying to, they obviously believe they're creating some additional value over and above just the net asset value. And it's because it costs them money to make this happen. And so that's built into the IPO price. All of these, if you look at these properties, for example, this one was purchased for $305,000, but they raised $363,000 in order to do it, right? And a good portion of that, goes to things: closing, offering, and holding costs, their sourcing fee, property improvements, and cash reserves. So this is sort of some value, but these other two are just expenses that are being borne by the deal. And so I want to think about, okay, what is the value of this property? And this isn't even doing a perfect job of, getting to me to what that is going to be worth at liquidation, because there are fees involved with selling and fees and expenses. And so, but at least it's getting me a lot closer. And so that's what I'm doing here, figuring out that discount. And then I'm calculating the yield by taking arrived on here. They're telling you, okay, what's the yield at their valuation? But again, I don't care about that. I want to know what's the yield at the price that I'm paying. And so I'm sure I could go in and find the actual amount of each dividend. But, again, to just make it easy, what I'm doing is I'm taking the arrived valuation and I'm multiplying it by the stated yield, because they're giving you a yield amount. And then I'm dividing that. Oh, wait a minute. What am I dividing? Okay, so I'm doing this wrong. I should be dividing it by my price, right? Because I want to know what is the yield at. I thought those numbers all looked too big. I want to know what's the yield at my price. Oh, okay. I screwed that up. Okay, so I got to do this for each one individually, because, and this would be, what I really should have done is created another row where you put the arrived valuation in. But this works too, right? I'll just do this. And this one I think is going to look even better. Yeah, okay, that gets us over a 6% yield. So you can see, like, once we start to, I thought this wasn't working right. I just put these together quickly. I'm glad I caught it though before I did a whole bunch. I think what I'm going to do is actually create a row that says, the yield at arrived valuation, and then I can highlight that, and then it'll make it easier for me to drag and drop my calculations or my formulas. But anyway, you can start to see, like, okay, maybe we've got some deals here. Like, okay, I don't really want a 4% yield, even with a 15% discount. Like, what I'm starting to be able to compare these to is the same way. If you saw my ARC 7 video yesterday or the day before, I started to buy some of those at a discount, and I guess maybe it was just the what I bought this week video. The actual ARC 7 video, I might not have done one on the property itself. Anyway, I digress, right? It doesn't really matter. What my point is that I can start to compare, okay, how big of a discount am I getting over there? How big of a, compared to the yield? And so, like, I'm getting a 20% discount on some of them with a 5. I think the most recent one I bought, I was getting somewhere around 20 to 25% discount. Maybe 20, and getting a 5% yield. So, like, okay, if I'm looking at that compared to this, well, this is not as great. Although, I have to compare, is this a long-term rental? That one was a short-term rental. But I can start to do that work. It's going to just take a lot of time, though, because, before, when we could just sort it for what, the biggest discount for the cheapest available, you could do that. And then kind of scroll through and see, okay, where do we have good yields? Now that we can't do that, it is going to just be, for me, a more manual process. And I don't know. I think that I'm going to do it like this, where I just kind of scroll through and look. And so, okay, this says it's a 8%, or around an 8% discount. But when I look at this, okay, if the average of this is 8% and some of this is not even a discount, well, then there's probably some available at a deeper discount. And so, I actually think maybe I looked at that one already. Did I? Yeah. And so, yeah, there's some that are available And this is a 12, almost 13% discount from the Zillow value, which is significantly below the Arrive valuation. So, you can see there's just a lot more opportunity than if I'm just sorting, if I'm just using this sort. It doesn't look nearly like there's the same level of opportunity to buy this. And so that's what I think. It's weird. I think it's going to hurt the amount of sales happening on the secondary market unless people are really paying attention. But at the same time, I can see how their optics for their company, they didn't like that. When I sorted over here, it was like 38% discount, 35% discount, 20% discount, almost 20, 18. That just looks terrible for them, right? So I understand why they might have done this. It's certainly not great for us as purchasers. Wow, this one has an insane number listed. They've got 1,000 at $925. Yeah, that's not a huge discount from the Arrive valuation. I'm curious, obviously have to do the work to see if it's a discount from the real world value. But this is how I'm going about it. I'm just scrolling through looking for ones that appear like they're going to be good. But one of the things that I noticed, like, it doesn't really, looking at this average isn't necessarily even that helpful, because there are some where there's a whole bunch that are listed like over the price too. And so, this doesn't look like it's a very big discount, but these shares here, I'm sure that they are. Other than that though, it seems like this market is moving along just like it has been in the past. If you haven't already bought on the secondary market, you have to understand, I can put orders in, I can manage my orders, I can sell shares, but the actual matching process only happens during market hours. So it'll be like, I don't remember exactly what the market hours were. Let's see. There's some, I think, using I think it's this. Well, this tells you how they match. Buy shares, other tips. Not matched during the current trading window. They'll be canceled at the end of the week. Somewhere in here you can actually look and see what they are, but they're basically like business hours during the week next week. But over the weekend, people can start putting in orders, and you can get a sense of how they're going to match up, what's going to be available. Do your due diligence on the properties that you're interested in. I wish I had more time this weekend to really jump on this. But, as the week progresses, that's what I noticed. There's, you'll see some fluctuation. And sometimes, like, deals will just come up and you'll have to grab them. I think that's why some people are just, like, basically putting these big orders in at a big discount and then just hoping, desperation kicks in for someone and they match up. But you can see, like this one. Okay, this looks like they're actually, the average is selling above the Arrive valuation, but you've got a chunk here that are actually discounted. It's a 4.8% yield. So what's that chunk? That looks like that's this, right? 100. There's 100 of them for $10. Oh, there's none of these. Even these 975, there's not buy orders that would match up with that. So 975, and they're saying they think it's 1054. Obviously, again, I'd have to look at what do I think that property's worth, and that's what I would expect you to do. But I don't know. Hopefully they'll change this back. If you've been using this platform, I think this is something we should all complain about, because it makes it much more difficult for us to actually find those deals. I don't know. It does just seem like the only reason that they might do that is for the optics of things. Obviously, too, you can sort by yield, but when you do that, like if you start up here, okay, well, there's not really, all these high yielders are in quote unquote high yielders, right? I mean, it's not even that high of a yield. It's not until you start to get down to here that you start to see, okay, well, maybe we've got some discounts to be had here, right? Not a huge one, But if I'm getting, a reasonable yield and and remember, again, this yield is at the arrived valuation. So if I'm getting a discount from that, that's going to make the yield a little bit higher. So it looks like, from my initial looking at several of these, I think that you can get, some small discount and, mid to high, not quite high, but like, slightly above 6% yields. And in addition to some discount, that seems like the best you can hope for. I mean, maybe if you start to really dig through these, we'll be able to find some better ones. Maybe there's just ones that I haven't found yet, because like I said, I mean, it's just a whole bunch to look through, and I can't just say, okay, give me the deepest discounts and let's start there, which is what I did last time around. I should probably build something like a spreadsheet that I keep track of from one to the next. I'm somebody who like makes it, and then the next time I just make a new one, which is dumb, right? Don't do that. But I also, I think I bought one property on the secondary market last time. I think I'll have a little bit more time and maybe, see if I can pick one or two up this time. Like this one, for example, you can see again, you have real big, a whole bunch trying to sell above the arrived valuation. So this little chunk, I think there's going to be some available there. Now, yeah, that's in Cincinnati, Ohio. Do I want it? So that's the other thing too, is you can use these features and sort of, you could pick whatever locations that you want for. So we can narrow it down in certain ways, and that'd probably be a smart thing to do, because there's some of the markets that they're in that I just have no interest in being in, although they have a whole bunch that I like, right? So I guess the real answer is it's just you just got to put in the work to find those deals. I think there's nothing new about that. The downside is you have to do it, and then we only have a week, so sort of doing all these little sprints versus like a lot of the other secondary markets, I can just go and check it out whenever I have time. That's sort of what I've been doing on ARC 7. That's what I do on Lofty. I still think it makes sense the way they're doing this here, because it sort of creates that, sort of that little marketplace where everybody's coming at the same time. And so I think you have a better chance of matching your bids and asks. They described that. I think they compared it to like a farmer's market or something in one of their blog posts, where they, trying to explain why they're just doing these short trading windows. And it made a lot of sense to me, from like making a market sort of point of view, right? Like, it makes it so you don't have people that are just like really vulture investors that just leave a buy order out there for super cheap all the time, and waiting for someone to come along that's desperate, and that's the time, right? Because now, there's still people that are doing that, obviously, but this is because it is a short period of time. There's a whole bunch of eyeballs on this right now, and if you put yours up, during this window, if it's a significant deal, there's probably somebody that's going to come and try to match up with it, right? So I think that's the thought process, and I do think it makes a lot of sense. But yeah, you can see we have 224 properties to look through. So I'm going to spend some time narrowing down the markets that I want, trying to find where there's some discounts, and hopefully pick up one or two over the next week. We'll see how that goes. Are you doing something similar? Have you figured out a better way to do this than what I'm describing? I'm sure some of you have. I know some of you guys have like trading bots you've built and stuff, so you're way ahead of me there. I'm just curious, like how you go about identifying ones, and then hopefully once you've identified the ones that you think are deals, you're doing the additional due diligence that we always talk about, right? You're making sure the rents make sense. You're making sure the value makes sense. You're making sure it's not in a flood zone if that's an issue for you. You're looking at the crime maps, like all these things, right? We're looking at the market. Is this a market that we expect to do well long term. This is just my starting point. This is just how I'm navigating their platform, and then trying to narrow it down to a few. And then once I do that, because I don't want to do full due diligence if there's not discounted shares available. But yeah, so anybody else that's out there looking at these deals, I'm curious how you're doing it. Feel free to jump in the comments and talk about it. We can talk about it in the Discord. I know a lot of you like to DM me. I think that's great. I like talking to everybody about the fractional real estate, investment strategies and everything. But I think the more we can create a conversation in the community, the better off that we are. I understand in things like this one, we are competing against other buyers. I don't think that there's, I think there's an abundance of deals across all the platforms. And so I don't see that as really I don't see that we're being that competitive with each other on most of the platforms, most of the properties. But yeah, if you don't want to mention the specific one that you're looking at, but I am curious, how people are going about attacking this problem. Anyway, that's it for me for today. Until next time, I'm going to just keep making mistakes so that you don't have to.